Hi, I'm Tess Downing, founder of Complete View Financial, and welcome to this month's video blog. Today is all about taxes. We're going to spend a few minutes analyzing the new Biden administration's American Families Plan that was just released a few weeks ago. While this proposal still will be debated in Congress and a lot is still unknown, today we're going to unpack a few of the major proposed changes that could impact you from a tax perspective. So looking at this first slide here, I've highlighted a few of the important new tax proposals that obviously have an impact on high earners. And so the biggest one obviously is this top ordinary income tax bracket could be shifted back to 39.6% from where it is now at 37%. A new long-term capital gains rate has been proposed. Right now, most people pay 15%, and those above $450,000 roughly pay around 20% on capital gains rates. That is now proposed to be shifted up to 25%. There's a new 3% surtax for ultra-high income taxpayers with modified adjusted gross income over $5 million. They would like to prohibit backdoor Roth IRA and mega backdoor Roth 401k IRA conversions. There's a new required minimum distribution for taxpayers with high income and retirement accounts over $10 million. A big one that we really need to pay attention to is the reduction in the estate and gift tax exemption, roughly where it is now around $11.5 million back down to $5 million. The expanded child tax credit, a monthly benefit of around $250 to $300, depending upon the age of the child and your income. And then the wash sale rules to apply to additional asset types, really getting up to speed with some changes in the markets to include cryptocurrencies. So high level, those are some of the big changes that have been proposed, but let's take a closer look at some of the tax bracket changes. This next slide here shows the ordinary income tax rates under the proposed legislation. You can see single, married filing jointly, as well as where we are currently versus the proposed. And the big takeaway here is really that high income taxpayers that are in the 37% bracket now would then be bumped to the 39.6% bracket. But not only does it increase the rate, it also significantly lowers the amount of income a taxpayer can have before finding themselves in the top bracket. So that's a big change. So now let's take a look at the capital gains rates tax proposed. So you can see the current column there, the 0, 15, and 20%, and then of course the proposed for single versus married filing jointly. And what you can see here is paired with the new top ordinary income tax rate is a new top long-term capital gains rate of 25%. Unlike the proposed change to the ordinary income tax rates, which would not be effective until 2022, the proposed changes to the long-term capital gains rate, it's proposed they would go into effect immediately, so impacting long-term capital gains incurred on or after September 14th of 2021. Now, many argue this will not happen, but it is what has been put into the legislation. And so thus taxpayers with large unrealized capital gains would not be able to sell these large assets before the end of the year to avoid this higher rate. A quick fact is that the 25% rate is the highest top rate imposed on long-term capital gains since the middle of 1997. So here's some key takeaways on the American Families Plan. Taxpayers who will be most impacted by the new rates are those in the $400,000 to $500,000 income range. They will see themselves move from the current 35% bracket to a new 39.6% bracket, as higher earners who are already in the 37% bracket will only see a 2.6% increase to 39.6%. Another main focus of the bill is obviously reforming the retirement plan rules to really close these perceived loopholes commonly used by higher net worth individuals. And a big one here is essentially eliminating the backdoor Roth strategy, as well as prohibiting Roth conversions of after-tax funds and retirement accounts altogether, especially for those in the top income tax bracket. So this would be a huge change for those taking advantage of annual Roth conversions and backdoor Roth IRA contributions on an annual basis. One of the last big changes that I think will have a big impact, obviously, on estate tax planning is the proposed reforms to the estate law, which is essentially a 50% reduction in the estate and gift tax exemption. So although this change was scheduled to sunset automatically in 2025, this proposed bill essentially shifts that timeline forward, reducing the exemption amount back to $5 million for 2022 and future years for an inflation adjustments. For those that need that with estates over $5 million for single or $10 million for married, really need to take a hard look at their estate planning documents and their estate tax plan to figure out if changes need to be made. So thanks for listening in to this month's video blog. Have a wonderful day.